full breakdown of Uber corporate earnings. Will Uber become profitable this year? That's the question that everybody wants to know. That's what we're going to be talking about today. And ladies and gentlemen, without further ado, if you haven't done so already, go ahead. Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys live with a midnight, early in the morning type show. My schedule has been all over the place. A couple of things that I'm going through right now. So I'm sorry if I've not been able to be as active as I would like to be. I got about my hands in like 5 fires and things like that. So so y'all bear with me as I get this completed and done. But without further ado, ladies and gentlemen, as you guys and girls tuned in for a full breakdown of Uber Q1 earnings. So Uber earnings came out, I would say, yesterday afternoon. The time I was planning on getting with them, or not getting with them, but doing it live. But some things came up to where I wasn't able to do that live at that time. So I'm here today, better late than never. So anyway, ladies and gentlemen, without further ado, drum roll, please. Let's jump into these quarterly earnings of Uber. Now, for people out there, let me pull up the screen here, and we're going to walk through it step by step here. We're going to do a full breakdown. My big question that I'm looking at, if you are catching this live, if you are up on the vampire time somewhere around the world, definitely feel free to drop a comment or whatever, but I don't expect nobody to be here at this time of night. But there probably is somebody somewhere in the world. So the first thing, ladies and gentlemen, you have the quarterly earnings report. This came out from the SEC, the quarterly earnings report. So let's first, before I get into this, let's do the overview first. Let's do an overview before we get back into the actual thing. Hold on one second. Y'all give me 1 second. Let me stop that. Sharing my screen here for the people that can hear the audio. And where are we? Boom. Boom. All right. So coming out as of yesterday, May 5th, gross bookings reached an all-time high of $19.5 billion, up 24% year over year. It's pretty good to hear coming out of the pandemic. They had a net loss of $108 billion and a adjusted EBITDA of $359 million. So, when I'm looking at that adjusted EBITDA, that's the thing I'm paying attention to the most, because my question, all I want to know is, Uber, are you going to become profitable by the fourth quarter? If they can do this, I think that none of the competitors are profitable right now. Lyft is not profitable. Grubhub, DoorDash, none of those in that gig economy, none of those companies are profitable as of yet. But it's my belief that one of those companies will become popular, but profitable. And I think Uber is in line to do that, because Uber not only gives you ride like Uber, but it also delivers food like Grubhub, and it delivers everything like a Postmates. Speaking of, it brought Postmates. So, they have Uber Eats to deliver food. They have Uber to give you rides. Then they have Uber Freights. So looking at all of this, and they have the brand name, I think that they're going to be the best ones to be in position. So let's look at some of these highlights they wrote up here, right? Their gross bookings grew 24%. It grows for year to year to $19.5 billion, 22% of a constant current basis. Mobile gross bookings, when they say mobile gross bookings, I mean people catching rides, of 6.8%. It has gone down, and delivery gross booking has gone up 166% overall. Give me 1 second. One of my lights went out. Kicked one of my lights out. But okay. Anyway, ladies and gentlemen, making sure I don't step on that wire. Right here, they're saying their gross bookings, people catching rides, have gone down. They're down 38% year over year, but that's kind of expected with the current state of the economy and what's going on in the world with the pandemic. Now they're saying that their delivery gross booking has gone up 166%. This is their Uber Eats. So their Uber Eats have seen a big growth, whereas they've seen a decline in their actual bookings for themselves. Now, so okay, that's kind of understood. Revenue, the mobile revenue of April was reduced by $600 million for reducing historical. Okay, all right, for restitution of the historic UK case that related to classification of drivers. So right here, this is a big ding right here against Uber and any company that's in the gig economy, and I'm fine with this. Uber is always in court, is always having a lawsuit. It always has something going on. I don't like seeing that with a business, but it reminds me of any new startup that comes into the space. Look at Facebook. Facebook is always into something. Facebook was always being noticed for something or whatever, whether it's media or you're a media company or whatever. But that happens when you have a new company coming into a new space. Let's say if I started a company that delivered mail. I mean, with drones, like, you go to the warehouse. I know this kind of exists. You put the drone on top of the package and it drones people that mail to their house. You know how many legal problems I'm going to have, how many times I'm going to get sued. One day my drone is going to hit a bird. One day my drone is probably going to hit somebody's house. My drone is probably going to deliver to the wrong house. My drone is probably going to fall out of the sky. The FAA is probably going to, the FAA who controls all of the flights and stuff like that, they're probably going to say, you flew too high, you flew too low, you need all these type of restrictions. Then I'm going to have an issue with the people that are flying drones. They're not getting paid enough and all of the stuff like that. It's just growing pains. It's a new space. Everybody loves a new space, but they forget when you go into a new space, you're going to have growing pains. Take me for example, right? Things that I'm trying to do that are new to me, things that I haven't done, things that are new to me, I'm going to, and it stresses me. Why does it stress me? Because it's not my comfort zone. It's something new. So right now, let's say, take me for example, I started in the military and coming up on 18 years. It's a comfort zone for me to do the exact same job for 18 years. But to come on here and let's say shoot a podcast and to be live, 1 o'clock in the morning on Mountain Time, and you've never done it before to get on the camera, it might be a little difficult. But guess what? The difficulty is what the growth is. Anybody in business will tell you that. Where the difficulty is where the growth is. So for prime example, when I look at the gig economy, Uber is talking about delivering, they brought the company Dazzle, I think it's called, Dazzle, where they're going to be delivering alcohol. They're going to be delivering alcohol. You know how many problems it's going to bring up when they start to deliver, when marijuana is finally federally legal and they're going to start to deliver marijuana. You know how many problems it's going to cause? You know how many times somebody's going to be, the joint, you only could take this. The regulation is going to be ridiculous. So it makes it hard to walk into that space. Same thing what you look at with Tesla and Apple and all these other companies like that. You're going to see with, when you look at, when they get into the electronic vehicle space. Well, not electronic vehicle, I mean self-driving cars. Self-driving cars, guess what? Somebody's dog is going to get hit. They're going to have problems. And that's what I see with Uber. I didn't want to go off on a tangent there, but this is what I see with Uber right here. They're saying revenue of 2.9 billion, and mobile revenue was 853 million, were reduced by 600 million dollars for restitution of a historic claim in the UK related to classification of drivers. Delivery revenue of 1.7 billion grew year over year, but right here they're saying $600 million is gone after restitution for the case they had in the UK, whether you're going to be a driver or you're going to be a contractor or whatever, right? So that's a big thing. But I think with a company of this size and magnitude, that they're going to eventually figure something out. That's why I said it reminds me of Facebook. I'm just watching to see, hey, yeah, they're going through growing pains. Yeah, every day they can't stay out of the news for getting sued for this and that. But companies like that usually over time, if it's enough money and enough space there, they're going to figure it out. Okay, so they're kind of going through their quarterly earnings. Let's go here and see what they got to say. Uber is starting to fire on all cylinders as more customers are riding with us again while continuing to use our expanding delivery offers. This is from the CEO of Uber. His name is Dar. I can't even know. I'm going to try his last name. Mr. K. That's what I'm going to call the CEO of Uber. Now, he says, we will continue to innovate and find new ways to deepen our engagement with our customers as the only global platform that helps you go wherever you need and to get whatever you want. We've outperformed both gross bookings and adjusted EBITDA outlook, with mobile trends improving through the quarter and continued elevated growth for our delivery business, combined with a disciplined operation execution, said the CFO, Nelson. Uber is very well positioned to drive long-term value with the improving EBITDA performance, significant liquidity, and increasing value in minority investments. I'm sorry. So right here, they're saying we're on target for they're outproving the EBITDA. EBITDA is earnings before interest, taxes, depreciation, and amortization. It's an acronym. So this is going to tell me how are they as the EBITDA improve, that they're telling me they're online to become profitable by the end of the year. That's all I really want to hear out of all of this. By them saying Uber Eats is going up, I kind of expected Uber Eats to go up. They're saying they have a decline in people catching rides, of course, year over year. Of course, with the pandemic going on, more people are not catching rides. We're not having events and ventures and things like that we were usually having. So I was kind of expecting that. I also was kind of expecting, to see Uber Eats go up. Their revenue is still good. And the big thing was, are they going to be on par with EBITDA? And since they are, we're good to go with that. Now, let's get this breakdown like you're not going to see anywhere else. Well, I don't think in terms of the... Y'all give me 1 second there with some playing in the background. Okay. Now, right here, you go down here to the 3 months, their gross booking. Their gross mobile booking has declined. You can see in 2020, year over year, this is in the millions, they said. So 10 billion. Now, and they've dropped 38% change, but here's their makeup. So they dropped 38% in mobility. Mobility is when they're giving rides. Delivery, just you're talking about Uber Eats dropping things off. They've had an increase of 166% in freight, right? In freight. In 2020, they were at 198 million. Now they're at 302. So they have increased significantly in freight, and they have increased significantly in delivery. Now, the only thing they're having a decrease in is mobility, and it could be too. Sometimes some people think it's competition, which I think is more when you go into Lyft earnings that reported yesterday or the day before. They all reported that, hey, nobody has the same numbers. So I think that the state of the economy is what's dragging them down there. Now we look at revenue, right? You look at revenue. So their revenue has slipped. You're looking at mobility, because that was the number one way of getting rides. So revenue from mobility has declined by 65%. When you see something in the parentheses, that's a negative number. So you see the 65% is in parentheses. That's letting you know that it has gone down 65% from the 3 months ending, from this year to last year. So from March of this time in 2021, you see mobility drop by 65%, but you have seen delivery go up by 230% revenue wise. And then you're looking at freight go up by 51%. So they've had a decline in their top line revenue of 11%. And that's mostly due to, you can obviously see they lost, if they would have had the same numbers, they lost, that's about 800, take out another 4, about 1.6 billion that they lost in mobility revenue. So imagine if they added that 1.6 at the bottom, if they would have had the same mobility numbers that they used to have before the pandemic happened, they would be, their numbers would be on the up and up. But now they're down 11% because they lost their number one breadwinner. Was before the pandemic hit, the number one way Uber made money was giving rides. Now, since the pandemic has hit, the number one way they make money is via delivery. All right. So not a big thing there. Over in the UK, this is where they discovered a lot of problems. Their mobility has dropped 41%. Their delivery has gone up 230%. And their revenue has gone up 8% in the UK. So, okay. So the Uber Eats, which pretty much is the delivery, has gone up so much that it has helped them out overall. All right, total rates. Okay, so I don't want to beat a dead horse there. Okay, now they're going to talk about mobility. Gross bookings of 6.8 billion. Mobility bookings were flat quarter to quarter and a decline of 36% year over the year. That means from this year to last year. On a constant delivery basis, okay, that's kind of be expected. They had a revenue of 853 billion. Revenue excluded the UK of 1.4 billion dollars in March. Uber announced that it will treat all UK drivers as workers. So they reclassified their drivers. They're not treating them as contractors, just creating them as workers. Now, this is huge because this could disrupt their whole business model. They fought for this in California and won, but in the UK, they lost a big case over there. So now, by them making their drivers workers, when you have somebody as a worker, now you have to worry about all the benefits of having a worker. When you pay somebody by 1099, you contract work, you give them $1,000 and they have to find their own insurance. They got to find their own employees and unemployment benefits, they have to worry about that on their own. But when someone is an employee, you got to take out Social Security, Medicare, all types of benefits. So it's more expensive. So they lost this in the UK. So it's a big deal. The question is, can this spread around the world? When it comes to the United States, which we tried it here in California, but they won the case in California to keep drivers listed as contractors, which is very good for their business model. But and then you got to think about it. They were going to pull out of California, but guess what? Here they classified they classified the contract as workers, and they still maintain a profitability there. So something to keep an eye on. If that trend starts to grow, where they classify everybody as workers, I can see them slowing down their EBITDA. But is right now they're not slowing down their EBITDA. Okay, so delivery. This is their Uber Eats. Gross gross bookings of 12.5 billion. They grew 24% quarter to quarter and 157% year over YOY, which is year over year. Q over Q is quarter to quarter on a consistent currency basis. Okay. What else they got here? They had something in here about I think they invested into their own self-driving car. I'm going to see if I can get to that. Maybe that's on the other report, but let's see here. All right, so they're reporting their gap, their platform, mobile platform, active drivers, the Eats Pass evolution, Uber Business. I'm fine with that. The Marriott. So they made a partnership with the Marriott. They got a 3-year partnership that enables customers to earn Marriott points on selected Uber trips and deliveries. Okay, the partnership brings together 2 world-class platforms. I don't know about Marriott because we got Airbnb nowadays. So let me see. Mobility, that's fine with that. Delivery. Okay, ads. Okay, so making pretty good one off of ads. All right. Okay, merchants and platforms that see this, so they're talking about here. They're delivering cosmetic wings, Smoothie King, and they're looking at doing alcohol. Okay. They got a GoPuff partnership. Uber and GoPuff have entered into an agreement to launch a new convenient offering with Uber Eats. So now they're going to be able to deliver anything starting in June. Customers can access more than 2,500 items from GoPuff inventory available for rapid delivery Uber apps. Okay. So they have partnered with GoPuff. Okay. I've seen that. I never used it, but I heard about it. Freights and corporate. Okay. The lowest income earning is freights. They have a little increase there, but nothing too crazy in freights, but that's okay. So here's their recent developments. They closed the AutoCab acquisition on April 12th. Uber closed the previous announced acquisition of AutoCab. AutoCab provides private hire and taxi operators with the technology to run their business, including booking, dispatch, software, and also connects them with trips through their iGo marketplace. Every month, thousands of people open the Uber app in the place the companies doesn't operate in to try to get trips. Through AutoCab IG Marketplace, Uber will be able to connect these riders with local operators. Okay, that's pretty smart. Local operators who choose to take their bookings in turn. Operators should be able to expand their operations and offering more earnings operations to local drivers. Uber will also explore providing drivers with additional revenue opportunities related to its platform for other services such as delivery. Okay, so now they pretty much launched the iGo marketplace, AutoCab. So this sounds like I got to look more into this, but it sounds like, hey, the traditional taxi cab service, we are allowing you to use our service to run your own taxi cab service. So essentially, this is their way to get around calling you a worker or a contractor. Let's say if you want to say, hey, I don't want to drive for Uber, but I want to have my own taxi cab service. So Uber's turning itself into a dispatcher saying, hey, you can use our service, become an AutoCab, and start your own delivery services right inside of Uber. That's what it sounds like with AutoCab. Next, they got Uber and Escom Telecom joint venture on April 1st, 2021. Uber and TMAP. So I get Tap. TMAP Mobility, a subsidiary, if I'm saying that right, smaller company of SK Telecom, launched their joint venture UT in South Korea. UT will combine Uber and TMAP Mobility services in South Korea. Okay. Well, I don't know about that. That's pretty much going to be it. This is going to be the web cab and conference information, but this is a quick, brief overview. I'm not going to jump into their balance sheet and their income statement, all the good stuff like that on this particular episode, but I did want to break down their Q1 earnings, just a quick overview that's a little deep dive into it. So my gist of it is that Uber is having legal problems out in the UK where they classify workers, contractors as workers. They cannot have this trend going on. I wouldn't be happy investors if I saw them turning more people into workers. I do like the launch of AutoCab where they're saying, hey, you don't work for Uber, you can start your own delivery service utilizing our cab service. Not cab service, but utilizing our AutoCab. So I do like that happening. They're still on point with EBITDA. Mobile rides are down, which is I kind of expected mobile rides to be down. And that's pretty much going to be it there. You got mobile rides that are down, which to be expected because people are not traveling as much. We don't have as many events. And then the other side is Uber giving out different Uber Eats is taking off. It is the golden child right now, especially with the shift in the economy going on. So I'm fine with that. And I didn't even know my cup. I didn't know y'all can see my cup over here. That's pretty crazy. So I was drinking out of my cup at. Okay, cool. That's all right. That is all right. So anyway, ladies and gentlemen, hope y'all got something out of that. Uber, I'm still to see if they're still on point to be profitable by the end of the quarter, and we're going to see if they can continue to make that happen. So anyway, ladies and gentlemen, don't forget to hit that like, subscribe, comment, and share button. And to the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe. My name is Prince Dykes. Peace, be safe. I'm out, and